IndusInd Bank will be the first Nifty company to report earnings today. The merger with Bharat Financial will likely aid the lender's margins, but asset quality will continue to remain the key metric to watch. Shefali Malik takes us through the numbers that the street is working with.
A muted quarter can be expected from IndusInd Bank this time around, with NII growth of just about 5.6% on a sequential basis and profit expected to be down by about 1% again on a quarter-on-quarter basis. On a YOY basis, the numbers are not comparable because of the merger with Bharat Financial. So we are looking at the sequential growth for some of these main metrics, NII and PAT. When it comes to the breakup of the various or going into the details of the business momentum, the loan growth is expected to be around 26% and the deposit growth is seen at around 22 to 24 odd percent this time around on a sequential basis. Loan growth will be aided by Bharat Financial merger. However, we would be looking for the traction in the CV portfolio because the last time around as well we saw that there was moderation in that portfolio considering the slowdown in the auto sector, and this time around as well we would be looking forward to the traction in that particular segment along with the asset quality in the CV portfolio as well. Margins are likely to expand to about 4.1%, aided by the high-yielding book of Bharat Financial, and we can expect strong traction in the other income, which in turn will be aided by the fee income growth this time around. Operating expenses might be a bit higher due to the merger process, and we can expect the bank to use the lower tax rates to mainly improve their provisioning coverage ratio. Remember, that is just at about 43% for the bank, and it is aiming to take it up to about 60% by the end of FY20. So that is one key metric that we'll be looking forward to. However, all the focus will be on the asset quality because along with Yes Bank, IndusInd Bank is one private bank which has exposure to some of the stressed names. So a couple of data points that we gathered in last couple of days or weeks. Moody's came out with a report earlier and it said that the bank's exposure to commercial real estate is about 11%. Jefferies put out a note saying that bank's exposure to high-risk corporates is at about 2480 crore rupees, which is about 9% of its net worth. And along with that, the CV portfolio as well, which constitutes a sizable chunk of its book, that will also be key to monitor this time around. Last time in Q1, the bank had told us that their exposure to three stressed groups is about 1.67%. So how those the asset quality has panned out specific to these three stressed groups, that will be a key monitorable this time around.